Good afternoon, everyone, and welcome. I'm Shannon Derejo from Creamer Media Webinars. It's great to have you with us for today's discussion on critical minerals. Africa sits at the center of the global race for critical minerals, with immense potential to become one of the world's most competitive and reliable suppliers. This webinar brings together an excellent panel who will explore what it will take to unlock that opportunity, moving beyond raw extraction to build value, resilience, and long-term development on the continent. A big thank you to our sponsors, Vedanta Zinc International, Standard Bank, AECI, Mintek, Group T, and Enterprises University of Pretoria for their generous support in making this important conversation possible. Today's webinar is also brought to you in partnership with Investing in African Mining Indaba, which is taking place in Cape Town from 9 to 12 February 2026. The Mining Indaba Conference is a pivotal event for mining professionals, investors, and industry leaders looking to capitalize on the vast opportunities on Africa's mining sector. Let's hear from key stakeholders in the critical mineral space who will participate in next year's event.
Coal is critical for Africa because the total energy demand that's required for the economic growth in Africa to alleviate poverty and unemployment is such that coal has a much longer demand requirement.
Minerals that would generally contribute to overall growth of the economies on the African continent. And coming closer to home in South Africa, we've defined critical minerals as those that are essential to contribute to overall economic growth, job creation, and security of supply, overall sustainability of the economies.
Critical for me means minerals that allow for sustainable energy transition, as well as commodities that make a significant contribution to a country or region's economic activity. South Africa and Zimbabwe have a strong competitive advantage in the PGM's value chain, all the way from mining to processing. Given PGM's increasing relevance for a more just energy transition going forward, this positions the African region well as an important contributor to the global transition.
Because when we talk about critical, it means what is essential and strategic as well. Talk about ESG, it means that we are acting responsibly towards our communities, responsibly towards the government, responsibly towards our shareholders as well. When we talk about copper is critical, it's because copper and its byproduct, cobalt, are both in what we call the energy transition pathway.
Critical minerals for Africa means critical to its economy, critical to its infrastructure development, and critical to its future. But the summary, pivotal to its economy, pivotal to infrastructure, and pivotal to its future.
Critical minerals are to Africa what global trading and maritime logistics was to Singapore in the 60s, 70s, and 80s. What I mean by that is an engine of development that made use of the natural advantages to where that activity was located, but based on a partnership between the private sector and governments, both domestic and international. And in the case of Africa, a strong spirit of partnership between us as the global mining industry and governments who do good governance for mineral resources in their home jurisdictions can mean this next 30 years of unprecedented growth in mining can mean unprecedented development in Africa.
A link to register for Mining Indaba is available in the chat, so register today and connect with investors at Mining Indaba 2026. Now, before we dive into today's conversation, just a few quick housekeeping notes. You'll find the Q&A box at the bottom of your screen. Please post your questions there at any time. Our panelists will do their best to cover as many as possible during the discussion. The chat is also open for your comments and insights. We encourage you to share your thoughts there. Just remember, questions go in the Q&A and conversations in the chat. Also, this session is being recorded and we'll share the link with you afterwards. We are also streaming live on YouTube and that link will be posted in the chat once available. With that, let me introduce today's facilitator, Laura Nicholson, who is the Product Director at Hyve Group's Investing in African Mining Indaba. Laura is a seasoned mining content creation professional with 21 years of experience in the mining and industrial sectors. She'll be guiding the conversation with our distinguished panel, which includes David Sturmes-Verbeek, the Chief Sourcing Officer at Mwamba Mining, Thapelo Moamogoe, the Executive Head of Metals and Mining at Standard Bank Corporate and Investment Banking, Dr. Elias Matinde, the Executive Manager for Pyrometallurgy at Mintek, and Vijay Kumar, the Deputy CEO at Vedanta Zinc International. It's an impressive lineup and we're looking forward to an engaging discussion. So Laura, over to you to lead us through today's conversation.
Thanks so much, Shannon, and hi to everyone online today. As Shannon mentioned, my name is Laura Nicholson and I am the Product Director for Mining Indaba, and I am delighted to fulfill the role of moderator for this very important discussion. It's a privilege to guide a conversation on a theme that sits at the heart of Mining Indaba 2026 and beyond's vision, building partnerships that drive sustainable growth and shared prosperity. Partnerships are not just a concept, they are the foundation for unlocking Africa's mineral wealth responsibly and inclusively. Collaboration between governments, industry, investors, technology innovators, and communities ensures that mining becomes a catalyst for development rather than a siloed activity. This conversation is particularly relevant as we look at critical minerals, those essential for the global energy transition, such as lithium and cobalt. But at the same time, we cannot lose sight of minerals that underpin Africa's economic growth and development, making them equally critical, such as gold, which remains a cornerstone of value creation, and coal, which continues to play a role in energy security for many nations. A special thank you to Mining Weekly for hosting the webinar. We're so excited to engage in this conversation today, and I'm particularly excited by the diverse panel that we have. We have a mining company, a technology expert, a financier, and an ASM specialist as well. And together they will bring a unique perspective to this critical conversation. So with that said, I'm going to turn my very first question to our mining company in the room, to Vijay. Vijay, if we look at this discussion from an operational perspective, how can African producers strengthen their competitiveness to position the continent as a leading supplier of critical minerals?
Yeah, thanks, Laura, and good afternoon, everyone. So, Laura, I think you answered the question while you were doing the introduction. First and foremost, I think it is important that we look at partnership. In today's space, where mining is always a very risky investment, and at any moment of time, if we can find partners, distribute the risk, and also bring in complementary skill sets, complementary competencies right across the chain, that would be important. Cost effectiveness at any day, any time, that is crucial because the mineral is on ground. How effectively we take it out, that's what differentiates us. The third thing would be, we talk about human capital. You can have the best resources, but if we don't take effort to develop the requisite human capital, all those resources would be sitting on the ground. And the last thing would be technology. Let's shape up the future to bridge even the talent gap that we may have. How do we use technology to replicate the talent which we don't have? And maybe somebody else from somewhere else can help us solve out those problems. So that's what comes to my mind, Laura.
Thanks, Vijay. And I've been a bit remiss because I wanted to ask each of my panelists to give their opening views on the topic, actually. So, Vijay, I'll allow you to continue with the thoughts that you've already started. If you look at the concept of partnerships, and the necessity for critical minerals. What is your sort of opening view or opening remark to our audience today about the relevance of this particular topic?
This particular topic, and specifically, for this particular continent of Africa, and today I'm talking to everybody from Liberia, where one of our operations is located. This continent is blessed with lots and lots of resources, but unfortunately, this is the continent which is least developed, and we still haven't reaped the real benefits that should go to the broader society because of the rich mineral resources. So now, continuously, the world is looking for a lot more critical minerals, and probably this is the moment where we as the mining industry need to reflect as to this growth trajectory that we are going to see. How does this growth trajectory benefit the wider society rather than just benefiting only few stakeholders?
Excellent. Thank you so much, Vijay. Some poignant marks you've made right from the start. Let me hand over to Thapelo to get his views just on the key ideas around this particular theme that we are covering today. Thapelo, over to you.
Yeah, thanks, Laura. So it's quite interesting. So I think it was in 2018, there was an article that said mining is a sunset industry. But when you think about it now, what you're looking at, this particular topic, you can see clearly that mining is not the sunset. We're talking about the green transition or clean energy technologies. That's not possible without mining, without these critical minerals we're talking about. When you look back at how the global economy has evolved, you see the centrality, the criticality of minerals. Minerals have always driven industrialization, and this is not different where we are. Critical minerals are critical for those key themes that you're talking about: clean energy technologies, electronics. Interestingly, when you look at the definition in the US, they're talking about there's not clean energy, rather they're talking about weapons manufacturing. Militarization, it's a key issue for the US. So you can see that it's quite a diverse sectors that it covers. But at the heart of it is that mining remains quite critical. It's a sunrise sector. So let me pause there for now.
Thanks, Thapelo. Even in South Africa, where I know there's a lot of controversy around are we sunsets or sunrise industry, I believe we very much are. Thank you. Let me pass over to Elias. Elias, your thoughts on our discussion today, and particularly maybe you want to give your views on how you see critical minerals on the African continent.
Thank you, Laura. I feel very strongly that this is the time for Africa as a continent, considering the diversity of the minerals that we have and the criticality of the minerals that we have, the mineral resources that we have to the global economy. And I'm not just talking about the critical minerals in the clean energy transition or in the just energy transition. I'm also looking at foundational value chains. And what I mean by that, I'm talking about your iron and steel, for example, the kind of industrial commodities that we need to build infrastructure. We still have a long way to go in Africa in terms of infrastructure. And this, to me, opens the window of opportunity for Africa as a producing continent in terms of minerals. I think the minerals today serve the role that the petro products served in the Middle East. And I think it's up to us now to look at it and take it a little bit further. So the element of partnerships, I think, is very critical. We can produce, we can manufacture, we can industrialize, but we also need markets. So we need to build partnerships. We also need financing. So I think for the moment, I'll pause there. I will elaborate a little bit more as we go on. Thank you very much, Laura.
Thank you, Elias. Appreciate your alignment on terms of critical minerals from an African context and just the amount of opportunities that we do have to offer the global world in relation to that. Now, David, I'll turn to you as last. You represent, with your voice, the artisanal mining sector, and it's a sector we often don't think about when we talk about critical minerals. We're busy worrying about how to get them out the ground and how to process them. But do we think about the greater communities like artisanal miners that have an opportunity to contribute towards economies and benefit from our mineral wealth. So David, over to you in terms of your views on our topic today, a very important one, I have no doubt.
Thanks, Laura. My perspective is largely based on experience in the copper cobalt sector in Congo, which is at the heart of the energy transition, but also the gold sector, where I've been able to work across East, Central, and West Africa. And my biggest reflection on the sector is that it's overlooked, as you've said, but also misunderstood. I often say that the artisanal small-scale mining sector is the most democratic way for people of a nation to experience mineral wealth and to turn mineral wealth into prosperity for themselves. In different countries, there's very different legal norms around that. In some, it is fully legalized and a cornerstone of the mining industry, and in other, it's largely informal, and yet again, others, it's often illegal, or perceived as illegal. And so it's difficult to generalize across the board, but the developmental potential is huge. And the number of people that find employment, we're talking about tens of millions of people that work across gold, gemstones, coal, lead, copper, lithium. So it's a broad range of minerals, a broad range of countries with varying levels of activity. And partnership is key to make sure that the concerns that we have around the informal or artisanal sector are being addressed swiftly and then lastingly, transitioning from artisanal to small-scale mining, uplifting communities while making sure that the people doing the work are actually safe in doing so. And then so purely from a wealth distribution perspective, it's the biggest force that Africa has. And so it's really exciting to see a change in mentality also within the mining Indaba context over the last few years, where artisanal small-scale mining is framed much more as an opportunity for engagement rather than a risk to manage. And so I'm excited to explore that further throughout this conversation.
Brilliant. Thank you, David. And thank you to everyone who clearly does see the value and necessity for partnerships for our African industry to really thrive within the mining sector specifically. Now, I think the place to start in my mind is the place we probably struggle the most. And Thapelo, this is where you come in. We have investment gaps when it comes to building and developing our critical minerals industry. How do we resolve that? How do we get greater investment flowing onto the continent to develop these mines, these assets?
Yeah, Laura, I mean, that's an interesting question. Because I think at times when we think about investment gaps, we're thinking money, that, there's shortage of money. However, I'm of a different view. So maybe let me give you an example. So I was at a mining Indaba in London in June, and there was a panel. And I posed a question to the panel. If you had $1 to invest, where would you invest, at least on the African continent? And the question is, when they think about the different jurisdictions, different places to invest, what are some of the things they're thinking about? What are their requirements? One of the key things is a pipeline of projects. So when you're looking at rare earths, an example, right? Do we know where they are? Have we done sufficient exploration? Do we know the resource reserves? Where do they lie? Right? And then you walk down the value chain. Some of the key interesting things that came out, and it's no surprise to all of us here in South Africa, as an example, we know issues we had around infrastructure. So infrastructure was a big key question. As we all know, it takes a long time when you've invested in a mine. Right? So from greenfield to production, it's about 18 years, at least for copper, from what we know, what we've seen. So the question of infrastructure, do we have infrastructure? When you have invested your money, can you get the product out? We know the dynamics we've seen, Kumar as an example, struggling, or coal companies struggling. We've recently resolved the issue around Eskom. However, that was a critical issue. So infrastructure is it's a key one. regulatory certainty. We all know, again, when you go into it, you put your dollar today, but you're going to harvest in 18 years. The question is, will the regulation be the same? I think 2 days ago or so, there was news in Zimbabwe that the tax regulation has changed, right? So now the fundamental question is that you invest in a market, midway, meet your investment in 5 years, in 10 years, will the regulation be the same? Will you be able to, to harvest and get your returns? So those are some of the key questions, So if you can answer those questions in the affirmative, you find that actually investors are willing to come in. And it's also important to make the distinction that when you're talking about investors, even banks, right, there's different commodities. They're not all the same. So it's important to understand that, investors in copper understand what the dynamics are in copper, rare earths, chrome, manganese, and the likes. So those are some of the key issues that if we resolve those, we will solve this fundamental question around the investment gap. I suspect there will be more questions on that, yeah.
Yeah, Thapelo, and I will obviously, everyone will feed into this conversation, but there is an immediate question that comes to mind based on what you've said. I think some of the issues you've raised that do prevent investment are not new issues in the country. Do you see improvements, at least in certain areas? Because these are not policy regulatory sort of issues are not new, but are you seeing improvement? Are you feeling confident that Africa is headed in the right direction with regards to some of these challenges that do need to be addressed in order to attract that investment?
And look, that question again, wherever you go in all the conferences, when you're talking about critical minerals, that's a question that's been asked. And I can tell you, in the affirmative, in South Africa, we all know, right? So there's Operation Vulindlela that successfully helped navigate the complex issues around Eskom and electricity issues. And today, we know we don't have those same issues. The mines, Vijay will attest to this, you hit stage 6 and there's the load curtailment, right? So all those issues. But today, all that is gone. When you talk to the sector, different investors, again, Vijay in Vedanta, they will tell you that there's improvement on Transnet. So we are definitely seeing improvement in that. Again, given the history of mining in Africa, these are not new issues. We've been grappling with them for the longest of time. So I think there is a plan, to move ahead, and it is happening. That's what we see. As you know, that we have presence in 21 countries, mining in 8 of those 21. So we do have teams on the ground giving us feedback in terms of how things are evolving. But certainly, I can tell you, things are improving. There is a bit of a progress that we see.
Brilliant, Thapelo. That's a positive message for the continent, which is good for those who are considering Africa for investment. Thank you. Now, it's ironic to me that when we have a mining industry, and somehow mining is only one component that we think about when we develop projects. Infrastructure, as has been mentioned already, has become key to the viability of a mining project. And I think more recently, and Elias, this is going to bring you into the conversation at this point, how we process these minerals, how we beneficiate these minerals so that the raw materials that we produce on the continent don't just leave our country without having some additional value add put into them. So from your perspective, Elias, what can the continent do to increase opportunities for additional processing and beneficiation? And as from a research perspective, I'm sure you have great insights around this.
Thank you very much, Laura. That's a very, very critical question. Before I dive directly to answer your question, maybe allow me to frame my response in the position of Mintek and introduce to the audience what Mintek does. Mintek is a government research organization based in Johannesburg. We do provide research and technology development services to the mining industry. We support from exploration through characterization and analysis, right through the extraction of minerals. So up to manufacturing, we've got technical divisions. So in addition to what Mintek does, and I would like to frame my response to your question as saying, what is it that we need to do? First of all, we need to understand where are the opportunities, where are the challenges within the mineral sector. And for us as an organization and as a continent, where is it that we can get value? So the element of research and development in unlocking value of our minerals is very, very critical to us. In industrializing based on minerals technology, mineral products, and other opportunities. So I would like to pause there and then continue this discussion. But the most important aspect in research is how do we develop fit-for-purpose technologies that will maximize value, that will unlock economic potential and impact in the communities in which the mining or the minerals are being extracted. By here, I'm talking about actually beneficiating at source, because it's very critical. But it comes back to the knowledge that we generate through research and development in organizations such as Mintek. And it's not only Mintek, there are other institutions similar across the continent that are doing a whole lot of splendid work in unlocking value for the minerals in Africa. Thank you.
Thanks very much, Elias. And a vital element to bring the research aspects to the table. But Vijay, Vedanta has experience when it comes to beneficiation and industrialization within your business. Perhaps you can share some of the learnings you have around being able to bring those elements into your wider business so successfully.
Yeah, thanks, Laura. And certainly on the topic of beneficiation, many times what happens is if we look at one industry in isolation, or if we look at a mine in isolation, I think we are answering the wrong question. The first and foremost, when we talk about beneficiation, we have to look at what is the overall impact to the broader ecosystem. Because just return on capital employed for say somebody is supplying electricity or somebody producing the minerals is not going to be important. What's the social return on capital that it might be driving, because it would have multiplier effects in terms of jobs and all that. So looking at some of these complex projects purely from the lens of the business NPV is not going to solve the issue. We'll have to really evaluate it in I would say, a lot more collaborative approach. So our own experience when it comes to executing some of these projects, and just for all your listeners and viewers, Vedanta, we are one of the largest integrated zinc producers in the world. We produce close to 1.2 million tons of zinc out of one of our complexes in India. And some of the key success factor has been, number one, certainly it is all about partnership. Instead of trying to solve everything, we seek out partners right across the globe, people who know what they are doing, and work with them collaboratively. The days of trying to solve everything and having one integrated complex all owned by yourself, I think for the mining industry, it's over. Second is taking along all the stakeholders. It's about the community, it's about the investors, it's about the government. And how can you influence that particular outcome to say that everybody wants that particular project to go ahead so that you don't hit the roadblocks? And the third thing is sometimes it's really important to be brave. And when I say being brave is there are certain deposits where Vedantas, somebody goes and looks into the history, these were assets where each mining company just said it cannot be worked upon. This has got a couple of years life left. And probably we are mining those resources at 5 times their original capacity for 20, 30 years, and maybe another 30 years in the making. So it's, an integrated approach around everything. But I think thinking outside the box would be really crucial for the mining companies. Mining is inherently complex, and let's not try to solve it with the same methods that we wanted to use in 1970s, 1980s. We'll have to develop some other methods.
appreciate such innovative thinking, Vijay. I certainly hope the rest of the industry takes some of what you're saying. We cannot keep referencing what we've done in the past. We need to look to the future. Very much appreciate how the theme or concept of partnerships continues to filter into our conversation in so many different ways. And I think, Vijay, you spoke about the broader ecosystem of mining, how important that is. And David, naturally, that lends to your area of expertise, or certainly where you are presenting from today. So, David, how do we ensure that artisanal miners, small-scale miners, and perhaps by extension communities at large are not left behind and do get to benefit from this global demand that we're seeing for critical minerals, that Africa does include them as part of that future development as the industry grows?
Let me start with a reflection on communities at large, and then focus on the ASM part and the second part of my response. And we often hear around the discussion with beneficiation, we often hear we need to be done with mine to port, we need to start adding value. But there's also a port to mine phenomenon that is less often talked about. And that means that a lot of the inputs for mining, industrial or artisanal, are being imported. So there's huge untapped potential in developing auxiliary industries for service provision and product provision on the continent. And then we need to think regionally rather than country by country, and then see how we could better source regionally for inputs that are currently being imported from the US or from China or from Europe, and then see if we can expand on manufacturing capacity for supplying industries. And that would have a ripple effect in terms of job creation and in terms of community impacts, infrastructure development, etc. And also from a financing perspective, a lot of investors might be less scared about investing in auxiliary services because they might also have a multi-utility lens to that, so that it's not only serving the mining industry, but could also serve the construction industry or others. And so with this, I really want to echo Vijay's point on an ecosystem thinking. Specifically around artisanal small-scale mining, I've mentioned in the introduction that the regulatory frameworks are incredibly important. So to ensure that this is an industry that at large benefits the communities that conduct the work and are impacted by the work, there needs to be a clearly enforced regulatory framework that ensures health and safety and minimizes environmental pollution. In the spirit of partnership, a lot of artisanal miners are coming from very mixed educational backgrounds, but we need to build technical skills. And so NGOs and government need to work together to upskill artisanal miners and make that pivot from artisanal to small-scale mining, to adopt better health and safety standards, better engineering standards, better environmental management standards. In some countries, Tanzania is one of them, we're really good in front-loading incentives. And with this, creating a pull for formalization. Mwamba has a processing plant that is fed by artisanal small-scale gold mines. We purchase the ore from these mining operations. That's only possible because the government is issuing licenses on time. The average time to get a license approved or rejected is 6 to 8 weeks. I've been working in Ghana for the last year and a half. And looking there, the government takes 4 to 6 years, and unless you facilitate payment to somebody, it can even take longer than that. I've heard about people that waited for 10 years and then died before their license was approved. So regulatory framework and uncertainty is important, and with this comes confidence of investors to invest into the sector. And it's not that it's an underfunded, it might be underfunded, but it's a funded sector. But the people that are currently investing are informal financiers that take huge risk and ask for a huge return because of that. And so by bringing in formal banks, microfinance institutions to finance the sector, the increases in efficiency and with the profitability are huge. We're talking about investments of tens of thousands of dollars that can be game-changing at that scale. And if we're looking at gold mining, that could lead to the eradication of mercury, which all African countries have committed to as signatories to the Minamata Convention. In other industries, it would mean better ventilation and better health and safety. So capital is key, but investors need regulatory certainty as well. And so just looking at that and linked to the skills question across the board, across processing, mining, and auxiliary services, we need to think about where does that talent pool come from? Because a lot of the expertise is currently flown onto the continent. If we're looking at battery manufacturing, or if we're looking at any parts of very specialized refining or beyond that, there's limited capacity on the continent. There might be Africans outside in the US, in China, in Europe conducting this work, but we need to think about how can we train this next generation of professionals and incentivize them to get into the industry. And I think the work Indaba is doing in changing the perception of the industry, showcasing that it's sunrise rather than sunset, is really important to pull a young generation into this to start studying with the intention of operating on the African continent and adding value in their home countries.
Thank you, David. Always inspiring to know the area that you are working in, and certainly from my experience bringing artisanal miners and communities into mining Indaba, I've learned just how much further advanced they are in terms of understanding the industry and what needs to be done. And I think support from the larger industry would go a long way into getting them where they need to be. But we're certainly not at the starting point of where those miners need to be. They know what they're doing, and a small amount of support would go a long way. Thank you, David, for some of those insights. We've got so many audience questions coming in, so I'm definitely going to bring some of these into the conversation. Thapelo, this one is for you. I think Amy is asking how the shift towards low carbon technologies are influencing capital allocation for mining projects at large. So from a finance perspective, is your focus on these critical minerals for low carbon technologies, or are you looking at projects across the board where they make sense?
Yeah, so from a banking perspective, we're looking at the returns and risk and returns, right? So the way we look at projects, it's almost similar. However, it's important to note that ESG is a very, very important component of how we assess projects. So I can tell you now, we won't be able to approve or fund any project that doesn't meet the ESG requirements. And I think it's important to note that currently ESG focuses a lot on the E. However, there's a need to focus on the S as well, on the governance. So we're trying to broaden that and make sure that you cover the whole scope of ESG. So what we certainly have seen is that there's development of new kind of financing, green financing, sustainability financing, which basically takes into account what the mining companies are currently doing. You would have seen, if you follow Standard Bank, that we have allocated big funds to actually fund sustainability projects, renewable energy projects. So it's quite a key thematic for us. And I can tell you, a number of investors, be it in Europe, US, they do have that criteria. So it is important. Certainly. But I think it's important to note that, for us, critical minerals, this type of mineral, whatever it is, the criteria, it's similar. I liked what Elias said earlier to say, this idea of critical minerals, it ought to be broader. When I opened my remarks, I said, there's no consensus of what critical minerals are. Currently, the consumers are driving that definition, but what South Africa has done very well is to define it from its own position, a position of a producer. Let me pause there.
Thanks, Thapelo, and appreciate the transparency in saying identifying a good project is a good project and the criteria associated with that, not specifically to one kind of commodity or another. Elias, if I can come back to you at this point and get your perspective on what technologies do you think are most essential right now in terms of research into development that will take Africa's critical minerals, and we talk broad critical minerals, forward into further development?
Thanks, Laura. That's a very loaded question.
Pick the
But
most important one, Elias, or one or two.
I'm very much tempted to say pyrometallurgical processes because I'm a pyrometallurgist by training and by experience and by
A bit of
everything.
bias in there, huh?
So it's very difficult to really specify to say this is this specific technology. So pardon me for that. I'm going to be a little bit broad and look at disciplines which we can apply to extract minerals and manufacture minerals. So let's look at your run of mine, your concentrate. It has come to the surface. It has been processed, it has been concentrated into something that is sellable. You can use two major approaches, which is smelting, which most people know is smelting, and also leaching. For commodities like gold, for example, talking of leaching and then recovering from solution and then, smelting and you produce your bullion. But in industrial minerals and industrial metals, when we talk of industrialization, we as a continent, we need to look at, and we've been looking at technologies that can produce commodities and products at scale. So that's when pyrometallurgical processes come in. So I'm a little bit biased there. We do have the technologies that we need to produce the intermediate product through smelting and refining, and then from there we go on to manufacturing. So it's very important to segment these categories of technologies, because consumers don't buy an intermediate product, they buy a finished product. So we also need to look at how we transform from mineral to intermediate product and from intermediate product to the finished product. So looking at the whole technologies that apply at each value chain, at each stage of the value chain. And for me, what is very important now is to say, what are the key industrial metals, industrial minerals, and key critical metals? If we're going to end up as a battery, a electrochemical battery, what sort of technologies will take us there, and what sort of flow sheets will take us there? And if we're going to end up with a motor vehicle, what sort of technologies will take us there? So it's really very difficult to say what specific technology without advocating, but we all understand that the smelting industry has played a more critical role. Looking at, for example, the iron and steel, we produce over close to 1.8 billion tons of steel to power industrialization across the world. So I'll pause there. I hope I've answered your question without really advocating for my area of specialization. I tend to do that a lot.
It's not to say your area of specialization is not incredibly important, Elias, so
Yes.
I appreciate your views on that. Vijay, a question from Amy. Amy is a very active question asker on our platform today, and I think a very vital question. We're talking about investment into new critical minerals projects, but we're not looking at operations that are in existence or that have been running for some time. So she states it in a way that says critical mineral operations often face declining grades and more difficult ore bodies. From Vedanta's viewpoints, she's specifically looking for yours, Vijay, where do you see the biggest opportunities for process optimization and fines recovery to maintain long-term profitability?
Yeah, no, thanks, Amy, for the question. I think the biggest, and I'm going to be a little bit biased, even though I'm a mining engineer, but probably I think every now and then I see the majority of the real benefits comes from how you treat the mineral once it has been mined out of the ground. So still, I think while the grades are declining, probably still a lot of focus needs to be done on how do we recover the best possible output from whatever we are mining. Still, even if we talk about a 5% or 10% recovery loss, that is the 10% of metal which you could have got it for free. So that is one crucial area, and certainly Mintek, I see being there, can be a crucial partner in that particular area. And technology is evolving over a period of time, and we have seen how adopting newer technologies in your processing streams or even in your mining streams can help you improve your recovery significantly from the same ore body. Second would be around selectivity. as to how can we be a lot more selective in those declining ore bodies and see where the best value lies there. So I'll stop there. I hope I've answered your question, Emmy.
Thank you, Vijay. From my perspective, you have, so I'm sure she's informed on that. A couple of questions coming in around ASM, David, a few. So I'm trying to pick the ones that I think are most pertinent. And Yamikani, hope I'm pronouncing the name correctly, references a country like Malawi, David, where they have abundant critical minerals, but they have an absence of skilled labor, accredited laboratories, stable power supply. How do you think the policy of local mineral processing can work when there's so much infancy in relation to things that are needed to support formalizing ASM?
So at Live, I said I was intimately familiar with the specifics around Malawi, but if we're looking at processing fed largely by artisanal small-scale mining and the regulatory environment that's required for that, there's a general distinction whether it's aimed at the domestic market or for the international market, because purely from a due diligence perspective, so ensuring that the right documentation is in place to be able to sell, especially into Western markets, a lot of the government mandated documentation is insufficient to ensure market access. And so as a processor, you need to invest in traceability. So having chain of custody, a clear visibility of where the material came from, and at mine site level, visibility for human rights impacts. The good news is that the threshold for accepting material has been set very pragmatically and very low. So you need to rule out worst forms of child labor, presence of armed groups, most hazardous work, corruption, bribery. And these risks are bulked together and are usually referred to as Annex 2 risks as defined by the OECD. Beyond that, downstream expectations would allow for continuous improvement engagement. But then there's still a question of who bears those costs. And usually a downstream doesn't want to pay a premium on responsibly sourced ASM material. They expect those funds, the cost to be equal to industrially mined material from other countries. And that's where countries should prioritize putting funding into its own ministries to provide appropriate support, or where NGOs can try to get donor funding to engage. But that's again where I'd like to reference Tanzania, because Tanzania, while there are NGOs working in this space, the government is providing a lot of services upfront. And with this, took a long-term vision of saying, if we are able to tax this sector, and they recover between 4 to 7% taxes from gold production, for example, depending on whether it's sold domestically or internationally, then we'll recuperate the investment that we put in place. And so you've got thousands of mining officers that serve hundreds of thousands of artisanal miners. And so that's crucial. And I hope that responds to the question. But again, I'm not familiar with the specifics of Malawi.
No, David, I think that's great. I think the principles of what you've outlined is kind of where the answer was really, really required. So that's great. And I think, yeah, government is one we've referred to in terms of policy, but we've not really spoke about government as government. And Thapelo, I'm pretty sure that this question is for you, and it is around governments, indicating that they remain a critical partner and often criticized for investors not investing due to policy. What is the mining industry not doing that it should be doing to influence governments to ensure policy is geared to unlock investment in mining? So Thapelo, what needs to be done between government and industry, or from a government perspective, to support unlocking investment? And you probably will reference policy again, but is there more to this question from a government perspective specifically?
Yeah, so look, I think it's really about the partnership. When you look at the history of mining, at least in South Africa, trust is something that was broken. You need to rebuild that. You need to make sure that the government is able to listen and hear what the mining sector is doing. I've been fascinated to see how with where they're coming in, there was a lot of that kind of, we are in this together. He has a lot of history with mining. So there is a sense that he was willing to listen, So I think you need to foster that, that the government can trust that the mining sector is genuinely interested in the benefit, not only for itself, but also for the country. And to be honest, what I'm seeing, when you look at, the contribution of the mining sector into the economy, be it by tax, direct corporate tax, employee tax, and all that, and the social labor plans, the community development work that the mining companies are doing. So that is encouraging. But as you know, even in your own personal life, building trust generally takes a while. One of the fascinating things when I was at that mining conference in London, someone said, they are willing to even invest in a dictatorship, which was a little bit shocking for me. Right? But, they were insinuating that in that kind of environment, there's a bit of predictability, there's a bit of moving fast in terms of, making decisions. So is the government listening? The sense is that they are. Is it easy and quick to make some of the decisions? My impression is that perhaps it does take a while. If you talk to DMRE today, they will tell you the one-stop shop idea, it's something they understand, where you can go in just one window and you just get all your licensing and you just walk away and get the approval. They understand that part, but to rally all the other departments around that same idea and actually, do it, as we all know, it takes a while. And interestingly, it's not only mining. If you speak to construction people, they will tell you. If you speak to, real estate or automotives, it's a similar thing. Let me close with this point. At that very conference in London, there was a lady who came from the US and was saying, because of these critical minerals, what President Trump has done, they've introduced a new clause. I think it's something 41. So basically, you can get your license across, all the departments within 41 days. It's a directive that he was able to make and said, this because it's critical, we can do that. By the way, when you look at the renewables energy journey, the president did that. You'd recall we had 100 megawatts at some point. Actually, it was 0. The government took it to 100, and over time, I think at one evening, the president came in and just changed that, right? So those are the kind of things that you need. However, we know that in our environment, perhaps some of those things take a while. So the point I'm making is that some of these things take a while. Unfortunately, mining, it's extractive, it's finite. The longer we take, you might wake up, the resource is gone. But I think that's a challenge that we face. Let me pause there.
I think what was interesting for me, Thapelo, about what you said is, who is government? Government's really broad, and there's more than one department that has an influence on approving or getting a mining project taking forward. There's water licenses, there's environmental licenses. There's so much more than just a mining minister and a mining department that's involved. So, that is certainly something Mining Indaba has focused on doing, is bringing all the relevant ministries to mining that have an impact on the development of our mineral industry, because there's so many more decision makers that need to be in the room and maybe partnering better, collaborating better for the betterment of the industry. So I know you said a lot, Thapelo, but that was definitely one of the takeaways for me from what you shared. Jumping to another audience question. Thank you so much to the audience. There are so many to choose from. Elias, to yourself, I'm going to summarize this question, but in essence, they're asking how we can learn from technologies that are already available elsewhere, because for most of Africa, we are in our infancy. I would exclude South Africa here. Can we leapfrog and jump a few hurdles in adopting new technologies by learning from others that are perhaps a little bit further advanced than we are.
Thank you, Laura. Let me just try to see how I can simplify my response. Yes, we can leapfrog, and yes, we should leapfrog, and yes, we must leapfrog. And how do we do that? I'm going to introduce two very important principles. The role of FDI in technology transfer. I think that's a well-known economic principle, that foreign direct investment, people coming with their technology to invest in Africa, is one form of proven technology transfer, how we can adopt new technologies. So that one I'm not going to talk about it because I think it's fundamental and we know about it. But there is the element of technology learning, and that principle comes from the ability of the economy to learn existing technologies and then reverse engineer, improve them through innovation, explorative innovation, research, development, and innovation, whichever forms of learning that are available to that specific environment, to come up with own innovations that are relevant and that are also unique, that will provide a unique value proposition to whoever is involved. So yes, we can leapfrog, but for us to leapfrog, we need to have the capacity to learn and adopt existing technologies, because the principle of leapfrogging on its own is you are doing what front runners, you are doing, you're going behind your front, ahead of your front runners by taking a unique path of your own. So that in technology, unfortunately, we're going to have to be able to start from somewhere, be able to build that absorptive capacity either through a well-developed innovation ecosystem. Also, the education system also plays a critical part. The issue of the financial system as well, because that technology will require a lot of financial investment as well. And the entrepreneurs who are willing to take the risk with the new technologies, because there's always that element to say who's going to take the risk. It hasn't been tested, and for you to leapfrog into the future, you're probably closing your eyes and jump. So that's the principle that I would like to. But as in research and development, that's what we do, and I think if we strengthen our innovation ecosystem within the triple helix, like the universities, the government, the industry, and institutions of higher education, we actually can leverage on existing technologies and also learning from global partners as well. I think what China did, Japan did, Singapore, the Asian tigers, there is a lot of learnings that we can adopt and partnerships that we can build as well with people who are custodian of the technologies today. I hope I've answered without really digressing, but it's a really critical question, especially in the context of the clean energy transition. We're moving into a frontier that is usually unmapped, and we don't have any individual who is dominant in any technology. Technology is evolving fast, so we need to be able to learn, evolve. That way we can leapfrog into technologies that are relevant to our needs, because I think that's also very important. We can even go back, regress in terms of technologies and adopt technologies that are relevant to our needs if need be. So I would like to put it that way. It's not always about going into the future. Sometimes looking back in the past and saying, what did everyone overlook that we can use today to solve our unique needs is also very important. Thank you, Laura.
Thank you. And I think you pinpointed something quite important. Well, from my perspective, we know that mining industry as a general, quite a slow adopter of new technologies. And if we're really going to, move quickly with technology adoption moving forward, we have to close our eyes a little bit and take those risks. They can be informed risks. They don't have to be completely uninformed, but a bit of risk-taking might be necessary. But I appreciate your responses, Elias. Vijay, I'd like to come back to you because you've spoken about beneficiation and industrialization, but I'm thinking about Vedanta's Gamsberg mine in the Northern Cape. I believe it was more of a difficult ore body to develop. It's in a very remote part of South Africa. What are some of the learnings you can share around how to bring an operation like that to success in Africa?
Yeah, Laura, certainly that was one particular, very large, probably one of the last large zinc deposits that was left around the world, and probably mining companies were holding it up for last 70 years, and nobody could figure out how to make it work. What the crucial thing for us was, see, in any particular project, one is the returns, which is very crucial. Second is also to find a market. And zinc, the ecosystem is quite complex. It's not only about concentration, but then finally, how do your end users, which is the zinc smelters and refineries, how do they make money? And most of the times they make money because there are impurities, so-called impurities, which might be a value add for these guys. And Thapelo as a deposit was actually super clean. It didn't had anything other than zinc in that particular ore body. So it was very difficult for us initially to conceptualize who is going to buy this. And going back again to the same subject, at that time, the organization went back to the drawing board, drew the whole map and said that what needs to change, where do we need to change the way we are looking at this particular thing to make it work? Certainly, our long experience in operating Hindustan Zinc, which has got 13 to 14 mines at different locations, that ability to handle complex ore bodies and doing lots of test work was quite handy. Secondly, our partnership with some of the key technology providers in terms of how do you even process this difficult ore body, that was crucial. And the third element was also around how do you do a project at such a price which can make the economics work, because you don't have anything else contained in the ore body. And there, our business model was very different. We didn't invest money in the mining fleet, which any traditional mining company would do. We looked for partners who had the fleet, and we said, okay, is it effective for that, for the business? And then the last thing was obviously heavy focus on what are the process efficiencies that we can get it. Because if you have spent all the money into recovering that metal from the ground, making sure that all that metal that we have mined, how does it reach the smelter? So these were multiple, I'd say there's not a single solution. It's all about taking a holistic approach, but being very open about trying new things, which has not been established till date in the industry. So the whole flow state is significantly different, and probably first time it was developed for any zinc mine. But we had to take that particular bold step, and yeah, now it's a success. And next year, actually, Thapelo is bound to become world's largest zinc producing mine in the whole world. I'm really proud of it.
No, that's fantastic, Vijay. And I love that you fed off of what Elias said about how you embraced doing things differently, and how that's actually worked out for you. If you take the right risks and take the right approaches, you know that you're going to benefit from it. So I love how that thread of narrative has come through very clearly. And congratulations on how successful Thapelo is as an operation. Really well done. David, a question that's specifically around Mwamba. So coming back to that artisanal mining, and I think a really important one, because in addition to teaching them to mine responsibly, we also need them to be aware of sustainability type initiatives, such as water use, or what they do with tailings or ultrafine recoveries. So David, how do you address the bigger ecosystem of ASM when it comes to being considerate about the environment in which they're operating as well?
Great. I have to elaborate a tiny bit on how we operate to make sense of my response. And I'd like to preface that with ASM being really smart in following the vein. So the material that ASM is putting out of the ground is incredibly high grade. Any industrial miner would dream of that, but obviously the approaches are different. In industrial mining, you take everything and you make sure you recover it, as Vijay just also explained around zinc. Artisanal miners don't have the luxury of industrial scale processing, and so they follow the vein and focus on high grade material. Also means they can focus on smaller deposits that are not necessarily financially viable from an industrial or medium scale mining perspective. But it then poses issues around processing. Because while I can point out these specific benefits of artisanal or small-scale mining and following a vein, there is hardly any benefits around small-scale processing or artisanal processing. If we're looking at gold specifically, the most common approach to gold processing is through the use of mercury. So there's some form of primary concentration, usually using sluice boxes. Then people use mercury to get about 40 to 60% of the gold out. And then they sell the tailings to somebody that invested in a leaching plant. There's either wet leaching plants, which are less of an investment and then take longer to process. Here we talk about 3 to 4 weeks processing time, or CIP plants, which are more capital intensive to build. And the tailings guys are the ones that make the real money because they didn't have the risk of drilling a hole without knowing whether they find gold or not. They can test the tailings before they pick them up, and they usually pay pennies on the dollar for the value that's contained. So it's very low risk, poor from an environmental perspective because we're talking about mercury contaminated tailings that are being reprocessed with cyanide. But that's how the industry operates across many different African countries. Where we came in was seeing mercury actually as the key driver for the founding team to get active, saying it's super inefficient to crush manually, then to use mercury to only recover 40 to 60%, and then somebody else makes the money when they buy the tailings. And so what Mwamba does is we purchase ore. We're not buying tailings, we're purchasing ore. And it's a pivot from an artisan miner's perspective because they're used to crushing and processing themselves. But if you can show them the benefits of saying, we can pay you the same amount of money you would make if you followed it through to the end of holding the final doré, because you've only been capturing 40 to 60% of the gold in there. So we can match that price, we can buy the material off you. And then we use industrial scale processing. At the moment, it's still small scale in comparison. So currently our plant is doing 100 tons a day. By early next year, it'll be 500 tons. Beginning of the year after, we want to be at 1,000 tons a day of material process. Today, I think Anglo, who are one of the industrial mining miners in the region, they do, if I'm not mistaken, they do 10,000 tons a day. And so right now we're doing 100 tons just for scale, but we're getting to 1,000. So it'll be 10% of Anglo's capacity at some point. But that's where you recover 95 to 98% of the gold. You need to leach appropriately. So cyanide is still a hazardous chemical, but if managed appropriately in an industrial context, it's completely fine. And we can bypass a lot of the concerns that we have around crushing in terms of health and safety hazards to people, the dust that comes with it, the use of mercury. And so our approach is to really focus on health and safety of the mining operations itself, looking at the stability of shafts, looking at the reinforcement through timber, advertising reinforcement through concrete, making sure ventilation is appropriate, and that the shafts themselves meet the appropriate standards, that people don't work 24-hour shifts, which is very common because then you're prone to hurt yourself. And so we focus heavily on what suppliers do in terms of mining practices. We're covering a broad range of ESG concerns in ongoing training to suppliers. And then we process professionally at an industrial scale, and we have a tailings facility that is permitted and needs to be approved annually from the government. We have people with chemical degrees to handle the cyanide and the explosives and everything else. So that's how we look at it. And what we can generalize from that, I really believe that formalization and professionalization of the ASM sector should be a centralized processing-led approach. Because then you can benefit tens or hundreds of small-scale producers that provide and centralize ore. And it could either be a company like Mwamba buying it, or them coming together and producer cooperatives with joint infrastructure. There's different models around that. But to repeat what I've said earlier, I don't think there's anything beneficial for artisanal processing. So pivoting to semi-industrial processing and improving artisanal to small-scale mining is the way forward, I believe.
Undoubtedly, and great expert on the subject, David. Well answered, thorough question on that one. I see we're already at 10 minutes after the hour, so I would love to offer each of my panelists an opportunity to give a closing remark on the discussion today. I certainly will as well. There's some key things that have definitely stood out for me. But let me start with my panel. Thapelo, do you want to go first? Just a 1 minute sort of summary or closing remarks on some of the discussion points you've had today.
Thanks, Laura. So, I mean, from my perspective, based on the conversation that we just had, I think it's important to note that there's plenty capital available to fund the commodities, minerals on the continent. So that's quite an important thing to note and remember. You know, it's important to also remember that whilst we're talking critical minerals, the definition, let's not be lost in it. You know, the blue metal versus the yellow metal or the green metal, for us, you know, it's all important metals. If you think about it, as Elias was saying, you know, steel manufacturing is still very important. In a solar plant, you need as much steel as you need for rare earths, as an example. I do believe that critical minerals will be to Africa what oil is to the Gulf states. You know, it will tend around our economies. However, you know, those things that we need to do needs to happen. So the partnerships between government and the mining companies, the ESG, their communities, those are quite important. As I said in my remarks, that, you know, we have presence on the ground in the different key mining jurisdictions on the continent. So feel free to reach out to us. We're very passionate about working with mining companies to help them, you know, achieve their growth ambitions.
Thank you so much, Thapelo. Elias, over to you for any closing remarks around today's discussion.
Yeah, thank you very much, Laura. I think today was very interesting because I'm looking at what I do every day from a completely different dimension, from a completely different lens. But I would like to emphasize the need of infrastructure. Yes, beneficiation is great. Beneficiation and industrialization, we all love that, but there are some critical success factors that needs to be there. We talked of infrastructure, we talked of energy, for example. It's also very critical because most of these processes require a lot of energy. So before we even get to say, how do we localize value chains? How do we bring back the value chains to source? We also need to look at that kind of lens to say, how do we incentivize the infrastructure and other, and I'm talking of electricity, I'm talking of road, for example, it's a basic, I'm talking of water, railway and stuff like that. But what is also very important, I think I tried to address earlier when I was looking at the leapfrogging, the question on leapfrogging, is the element of skills. And I always say, let's look at jurisdictions that have done this very well. Okay, those who have got it right. And China comes to mind. What did China do very well? They developed skills, a whole lot of skills. And it's not just engineering skills. You also need legal skills. You also need enterprise skills. You also need, artisanal skills. So it's the balance within the skills. So the issue of balancing our institutions of higher learning with vocational training is very critical if we are to achieve any form of impact from local beneficiation. So I think that's very critical for me. And then the last point that I would like to emphasize again, I think we've been talking about it, is collaborations. Usually in many circles, we look at, bringing value chains back to Africa as if everyone else.
You've muted yourself, Elias.
Yes, sir, I was trying to move. I'm sorry about that. So we need to look at the global community as a form of open innovation system that we can learn from. We need to learn from what others have done well. And China is one classic example. We look at China, how they did it, and then we can leverage from there. But partnerships locally, globally, is very important. And I think this kind of discussions, we need to have them more often so that we can position and frame our minds around what we can do to collectively achieve impact on the continent. Thank you.
Thanks, Elias. Some key gems that you shared there right at the end I'll hand over to Vijay. Vijay, your closing remarks.
Yeah, my closing remarks. So number one, see, still there's an immense potential, and certainly mining is not a sunset industry, probably still in the early infancy of the overall mining journey. And there were lots of questions, what can the mining industry do? Probably we are very bad in selling our own story, because there is an element of mining in everything every human being does, right through, right from getting up, right up to going to the bed. And probably that is not very well understood. Secondly, also, we have to sell the story when people talk about sustainability and everything else. We have to really understand, if it comes at a price, somebody has to be prepared to pay that particular price right across the value chain. Somebody has to do it. And if either governments or the financial sector want to drive that sustainability, they will have to also look at that, how do you put a value into it? Putting everything into the mining sector's hands and expecting them to only do it. If you want the world to transform, everybody needs to partner together, and then only the transformation would happen. Again, I would reiterate, partnership is going to be crucial, because the days of you controlling everything in your value chain, I think those days are over. And the classical examples, look at most of the technology companies, they are the best outsourced companies. Look at the auto sector. They're the best example outsourcing, and that's what the mining industry probably needs to look into it. One, I would say, ray of hope for Africa is this future growth would require lots and lots of skills, and given our younger population base that we have got in Africa, I think that's one of key crucial advantages we have. How do we turn it into a real advantage? We have got an asset, let's turn it into an advantage. Thank you.
Brilliant, Vijay. Thank you so much. David, last but not least, your closing thoughts on today's discussion.
Yeah. Elias and Vijay just talked about this in some form already, but I think it's important that Africa produces for Africa, first and foremost. 50% of the continent are not yet electrified, and meanwhile, people are switching from huge diesel-powered trucks to cyber trucks on the west coast of the US. And so it's about prioritizing, and you framed it perfectly in the beginning, what's critical for Africa's development, what's an export, what has export potential, but also what can meet the growing domestic or continental demands. Vijay just said that there's a huge young population. Hardly anybody owns a motorcycle or a car or other infrastructure, or very few consumers have solar panels. That's a huge client base, a consumer base that could be catered to, that could be financed. And we've seen that works really well in Europe, where a lot of consumers make money by generating surplus green energy through their own solar panels. And so if we can find systems that work for the people from production all the way to usage, that would be obviously phenomenal and the dream. And that takes international cooperation. I've mentioned that before, but I'll repeat it because it's important. Africa cannot be in an inter-African competition. There needs to be collaboration across borders between governments, from academia to processing to infrastructure. And if only there was a 4-day event in February where we could continue this discussion, because we only scratched the surface today.
Thank you, David. And indeed, we have only scratched the surface today. And an hour is never enough to cover a conversation of this extent or of this value. But nonetheless, there are conversations that will happen at Mining Indaba along this very nature. So thank you for referencing that, David. My takeaways is definitely, I think the majority are aligned. Critical minerals are not just those that are needed for the just energy transition. They are minerals that are needed for Africa's economic growth and development. I think my second takeaway is that the mining industry can no longer operate in isolation. We are part of bigger economic sort of value drivers and deliverers around infrastructure, industrialization, and we need to work together to deliver that for the greater Africa. I do like the let's take a risk on technology. I think the industry needs to do that. Let's leapfrog a little bit and reap the successes of doing so. Second last learning, we do need to learn from successes in the industry that are already there. That is how we are going to leapfrog as well in adopting successes that others have already experienced. This is something we're definitely focusing on at Mining Indaba. And last but not least, partnerships are an absolute non-negotiable. I think every one of my panelists has referenced the importance of partnership in what they've said. And Mining Indaba's theme is stronger together, progress through partnership. So to everyone on the call, do come to Mining Indaba and embrace your contribution to being a partner that takes our industry forward with great success. And with that, I'll close. Thanks Shannon and Mining Weekly once again for allowing me to host this very important conversation. Shannon, back to you. I don't know where Shannon is.
I'm not sure, Laura. Can you let's just close off there. I think you covered everything. Yeah, thanks for everybody's attention today. And yeah, see you at the Mining Indaba.
Brilliant. Absolutely. Thanks everyone for joining us today. Yeah.
Thank you.
See you at Mining
Indaba. Thank you, everyone.
Yes.
Bye.
Thank you.
Bye.
It's a pleasure. Bye.
Okay, now recording. So I'm going to recording. Okay, reclaim host.